So, topic for today's session is money and banking. In this chapter, we'll talk about money as well as some more important topics about the banking and its function. I start with money. Children generally students avoid the concept and definition of money, considering it of least important, but it is actually very much important as it is generally asked for one marker. So, whatever definitions given in your textbook, do prepare that. May it be based on classification, nature, features, characteristics, or on the basis of its functions, applicability of law, and many more things. But generally, money is defined as money is something which is acting as money or doing all the work of money. For example, the first definition written on your screen, which is saying that money is anything which is accepted as a medium of exchange, measure of value, and also store of value. It is also mean to the standards of deferred payment. So money can be used or it can be simply applied to the alternate of barter system. So you must now think what barter system is. I'm sure that you are already aware of this term because this is something very common. So in barter system, what happens is that the goods and services are exchanged against another good and services. Sometimes good can be exchanged to goods, services can be exchanged to services. In other words, goods can be exchanged with services also. Because this is all about the consumers, that means it is all about the needs of the two consumers. It is also known as C2C economy. It was very much possible in the beginning of civilization when human beings were limited. See, there were human beings who were living in a very small society, in a very concise area, or in a confined place with very much limited needs. So, to satisfy their needs and wants, it was very easy for them to depend on each other. But as the population grew and the civilization was also advanced, the people also had unlimited needs, which we have already studied in microeconomics in class 11. So, we came across certain challenges related to barter system. So, here we'll learn about the limitation of barter system. Limitation of barter system is all about the 5 points which are there on your screen. In fact, children, limitation of barter system is something which is there on in your syllabus. Functions of money is not directly there in your syllabus. So limitation of barter system and the functions of money are the phases of two same coins. So just believe me that if you prepare one of these topics, you will be able to answer both the questions. So the first topic or first point under this limitation is the double coincidence of bonds. What is double coincidence of bonds? When there are two parties to exchange the goods, it is always mandatory that they should have two common goods and they should also have two common willingness to exchange the goods and services. But every time it is not possible and feasible. It doesn't work out. So what happens is that one may be in the market with something which he wants to exchange with the other one, but the other one is not interested in taking or accepting the same thing he has. Or maybe that they both want the same thing, but they are not present in the market at the same time. So there are so many double coincidences required in this exchange, which is not going to work every time. So this is the biggest limitation of barter system. And especially in the time of today, when everything has been so high tech and everything where we have time constraint about, barter system is not going to work. Secondly, lack of common measure of value. Today we have the measure of value. We measure everything with some units, and those units are further measured with the help of currencies. For example, 1 liter is equal to this much of money, as 1 liter of petrol for 95 rupees per liter. So what is this? That means the value of per liter petrol is easily measured with 95 rupees. Now, if I say 1 liter of milk, that may be around 55 or 60 rupees per liter. You see, you here have two liquids which are measured with some unit which is common, but further they are measured with money, which is currency, rupees. Now you can easily identify their value. That yes, petroleum is more valuable than that of money. then that of milk. Then comes is standard of deferred payment. Remember, children, today it is very easy for us to consume. That is because of today we buy something and we make payments in future. But that was not that easy in barter system, because barter system was always about the present. There was no possibility of postponement of payment. Like if you want to exchange your crops or you want to exchange your other perishable goods with the other good, you cannot ask the person that you will accept the payment or the other good after 20 years when you need it. Or you cannot ask them to store the value, which is the next point. You cannot ask them to store the value and pay you after the years or after the months when you need them. Like today, for our urgent needs, for our future needs, for our future security, we store some money or we reserve some money. That is all because of we produce something, we earn out of it, and then we store the money. But in barter system, whatever we produced, we had to exchange it then and there. With no possibility of deferred payment, we had to receive the payment then and there. And that payment, what we received, was immediately used or consumed, because this was not money. This was another good or service. Moreover, it is not possible to store the goods which are perishable, like can be food, grain, vegetables, fruits, dairy products. They cannot be stored. Like today, I store it for my hard times and I use it in my hard times. That is not possible. So, lack of store value was another serious challenge of barter system. Then comes is the lack of divisibility. See, the last point is again very much appropriate, as when you are in barter system, you may have a very huge and very valuable thing which you have to exchange against multiple less valuable things. For example, in past time, cow used to be considered as very valuable good. In fact, many of the economies, many of the kings used cow as money. If you had to exchange your cow against multiple things like food for you, clothes for you, foodware for you, and many more other things, it was not possible for us to divide the cow and give it to the different parties against the goods which you required. Because cow was single commodity. It could not be exchanged with multiple commodity. And moreover, it was again not possible that single person had those multiple commodities for the satisfaction of your need. So this lack of divisibility again became a serious challenge for the barter system. Therefore, there was evolution of money. And money was evolved in a very interesting way. You know, earlier it was used as some token or as some uh, impression which were used as money. You know, sometimes even the pieces of leather, I repeat, sometimes even the pieces of leather were used in place of money. That means it was kind of token, like you gave something, some of the commodity to the other person gives you that leather piece, and that leather piece, which was easily stored or could be stored for a long time, was further exchanged with the other goods when you needed it. In the same way, people started exchanging silver, gold, and kauri. Kauri, you must be knowing, it's nothing but the shell, commonly known as kauri in our language. Especially religious purposes, it is used. So this kauri or the shells were used for exchanges, and they were again helping us out to measure the value of some commodity. For example, 1 kg of wheat against 5 kauri or 5 shells. So this is how the money was being evolved. But no, nothing. Just now I mentioned the piece of leather, gold, silver, kauri, or the shells. They were, you know, nothing were scientifically working. So we needed some scientific measure. So we started, some of the kings in India only started with the coin system. There they had the value of the goods against the coins, like 1 coin, 2 coin, 3 coins. But they were all made up of the precious coins like gold and silver, and easily they disappeared from the market. People started storing it in the form of a precious or expensive metal. instead of using it as a coin in the market to buy the things. Later, there was invention of paper currency, because paper currency, I'll further tell you that for paper currency has much lesser value than its face value. The intrinsic value is lesser than the face value. I'll tell you these two concepts in the next topics. So to meet these challenges, money was introduced. You know what? I told you that money functions are not there directly in your topic. But even then, this can be an indirect question. I repeat, it can be indirect question. So I'll now tell you functions of money. Now, how is this question put up for you? This question is put up for you like, how was money helpful in solving or resolving the problems of barter system? I repeat, how was money helpful in solving or resolving the problems of barter system? So money was helpful in solving the problem of barter system as it became the medium of exchange. As soon as it became the medium of exchange, like today we can easily exchange two goods with the help of money, or we can buy or sell anything with the help of money. We don't anymore need double coincidence of wants. We don't need any two parties to be present in the market and two common goods of requirement. So as a medium of exchange, money helped as the solution to the problem. Then measure of value. Money also is a measure of value, and a very standard and scientific measure of value. We have monetary system, which you have already studied in your maths junior classes. So this money functions as the measure of value. So the problem to the measurement of value has also been resolved with the help of money. Now, it was not possible in barter system to make the payments in future, but with money, it is obviously possible, especially when it is all about the time of electronic transfers in banking system and many more facilities which make our work easy. So today what we can do the purchases, we can do the consumption, and we can make the future payments with the help of the banks and the currency system. Store of value. Earlier, it was impossible to store everything. Yes, certain things could be stored like gold, silver, and many more precious things could be stored. But every consumption good could not be stored and could not replace its uses in future. Like after few months, after few years, it was not possible. Today it is. You can save the similar amount or invest the similar amount, and it can be only possible with the help of money. And that savings which you have done or investments you have done can be used in future. This is how money resolves the problems or challenges of barter system. So remember, children, this can be a 4 and 6 mark question. The limitations as well as the functions. Functions are never asked. They ask you how to resolve the problems of barter system. So these are the points which you need to elaborate, and in the same language or similar language as I talked with you with examples. Now comes to the next topic, that is money supply. It's a very, very important topic. The certain 1 mark is asked out of it. So what is money supply? It is the total volume of money held by the public at a particular point of time. Remember, I just mentioned the word particular point of time. That means money supply is all about the supply at a particular point of time in the economy. Because it is talking about the point of time, or it is only measured in the point of time, it is always a stock concept. And remember, this is when I was teaching you national income, I talked to you about stock and flow concept, that I asked you that the examples of stock and flow must be there in your mind, because this can be a 1 marker. So money supply is one of the stock concept, and it is the example of stock because it can be measured at a point of time, which we have already discussed in that session. Now, the money supply talks about 2 things. First, the money which is held with the public, means the individuals, the firms and all. And secondly, it doesn't talk about the money which is being held by the government or the banks. So when you're talking about the money supply, you're just talking about the money which is being held by the public in the form of the consumers or the producers. To understand the money supply, we measure it. that how much the money is being supplied at present or at a particular point of time, that is measured with the help of four concepts, which is M1, M2, M3, and M4. Now there's again a one marker. The first is what is M1 and what are the components of it? It's a very, very important one marker, sometimes 2 and 3 mark question also. So M1 is the measure. It is, it is the most narrow measurement of money supply, which comprises of currency and coins with the public. Second, demand deposit with the commercial banks. See, demand deposits is not the money with the bank. It is the money which can be anytime withdrawn by the consumers or by the depositors. That is why it is not the money with the bank. And the other deposits with the RBI, there are certain deposits of the consumers only, like sometimes NRIs depositing their money with the bank RBI, or there are certain deposits like CRR, SLR deposited with the RBI. So or short of other deposits also with the RBI is included into M1. Easy way to remember this is because generally students get confused. So M1 is equal to CC plus DD plus OD. Remember, CC plus DD plus OD. What is CC? Currency and coins with the public. DD, demand deposit with the commercial bank. We know demand deposit is done only by the commercial bank. And other deposit, that is OD with the RBI. So including these all, M1 is completed. Now comes this M2. Although M2, M3, M4 are not in your syllabus, even then we cannot avoid it because this is additional topic and that can be a part of your question paper. So comprising of all M1 and saving with the post office banks, we measure about the M2. M3 is even more broader concept. So M1 plus net time deposits. I hope you understand what time deposits are. Time deposits are all about the deposits which can be withdrawn after a certain time period, which is kind of recurring deposit and fixed deposits. Then comes is M4. M4, that is even the broader concept. In fact, it is the broadest concept. Here, M3 plus total deposits with the post office saving banks. Remember, NSCs are not included or comprises into it. NSCs are national saving certificates, which are not the part of M4. Again, it's a one marker that what is not at all a part of money supply. So you can write NSC, because see, in any of the measures, we are including everything. Here, maybe deposits with the commercial bank, post office bank, time deposits, everything we are including except NSC. So M1 is the most narrow concept and M4 is the broadest concept. Now comes this classification of money. See, this is again very important, especially in the point of view of one markers. The first is full-bodied money. What is the full-bodied money? Full-bodied money is something where the currency's intrinsic value and the face value is the same. Now you must be wondering what is face value and what is intrinsic value. Face value is the imprinted amount which is there written on the money or currency. Like if you have a currency with you and you see some denomination written on it, like 10 rupees, 20 rupees, 50 rupees, 100 rupees, whatever, that is the face value of that money. But the paper which it is made up of is the material which is made up of, which it is made up of. So that paper's value is the intrinsic value of that currency. You can easily judge it that the paper currencies are never equal in the face value and the intrinsic value. So what are the full-bodied ones? There are certain coins which are having the imprinted value, that means the value written on it, which is face value, is equal to its intrinsic value. So they are full-bodied money. So generally the coins are the full-bodied money, especially the times when we had silver coins in function, they were the full-bodied money. Now, representative full-bodied money. Representative full-bodied money are, of course, the various kinds of coins and currencies which do not match with their intrinsic value and the face value, but yes, they act as representative and they act as money. Credit money are the money which work in the form of credit. They can sometimes be bank money also. Now, legal tender money is the kind of money which is legally completely supported by the government of that country. For example, in India, INR is legal tender money. Indian rupees is legal tender money. Why? Because here legally everyone is authorized and set to accept the only currency which is Indian currency. You cannot deny, living in India, you cannot say that you don't need INR, you need USD. You can never say like that because this is against the law. Non-legal tender money, there are certain kinds of money which is actually not legally fully backed up or fully accepted. But yes, they are in run, they are in circulation. Certain coins, especially the coins of very small denomination, are the non-legal tender money because they are not backed up by legal prospects. Then comes is functional definition, which I had already explained you in the first slide. Now, based on the liquidity, money is everything which is acting as money. As you know, coins and currencies are money. What is near money? See, there are certain things which do not have complete liquidity in it. Money is very much liquid, you know. I just can give you the example that, like, if you carry some note with you, if you carry 500 rupees note with you and you give it to a shopkeeper, you can see standing then and there, the shopkeeper can give that 500 note to the person standing next to you. So money is very liquid. It can immediately move from one hand to other, and it can immediately move from India to US or US to UK. So it has high liquidity in it. But when it comes to near money is not that liquid. Why? Because it is not that highly acceptable and does not move that freely. If you talk about this near money, the various kinds of checks, the money which we hold in our account that is transacted with the help of check can be the best example of near money. Because money, that is definitely, check is very much close to money. If you write an amount of 5,000 rupees on the check which is being carried by the person is holding 5,000 in his pocket. But yes, that is not that cash. That check can only be cleared in the bank account. It can only be used after being cashed. It cannot be given to third person, or neither can it be forwarded to the fourth person. So liquidity is somehow checked. Therefore, it acts as money, but is not that liquid as the money is. So money and near money are the two different concepts. Now, scope-based, that is narrow definition, and broad definition. As per narrow definition, we here comprise only about the money, that is currency in coin, but broad definition talks about each and everything which is acting as money. Maybe the check, can be the ATM cards, can be the credit cards, can also be the gold and silver, which can be easily functioning as money. Like they can easily be exchanged to rupees, or they can easily be exchanged to money. So they are the broader concepts which talk about everything other than the currency and coins. Now, after this chapter of money, which is a very precise chapter, but there are so many one markers, which I would definitely advise you that you should be very particular about. The concepts of money supply, the definitions, the functions are all to be prepared very nicely. Now, when it comes to chapter banking, actually this chapter is rich in the subjective questions because there are so many topics from this chapter which are generally asked. So when it comes to the banking system of our country, there are two types of banks basically, which is central bank and the commercial bank. I'll first talk about the central bank, which is known as the RBI. It is an apex body and it was first time established in India in the year 1934 in April under the Reserve Bank of India Act. In fact, that time we were not independent. It was all done by the British government under the monetary structure or monitoring of the monetary structure. But then RBI becomes the apex body and it becomes the central bank. And the other commercial banks are all under the RBI only. So these are the these are the banks which perform all the functions like accepting deposit, granting the loans, making investment with aim of earning profit. See, RBI is not that frequent and is not that common with the public, doesn't accept the deposit, doesn't grant the loan to the public, doesn't work with the motive of earning profit, whereas the commercial banks work with the motive of earning profit. So sometimes it's a question in exam, what's the difference between commercial bank and the RBI? So you need to write, the first point you can write as RBI is the apex body, whereas commercial banks work under it. Secondly, they just control, operate, and regulate directly or indirectly the banking and monetary system, whereas they act as the banker to the common public, like accepting deposits and all. So these are the basic differences. The third difference is they RBI doesn't work for earning profit. It only tries to work for the establishment of economy, whereas commercial banks work for earning profit. Now coming to the major topic, that is functions of commercial bank. Children, out of the functions of commercial bank, the two functions are very, very important. The first is accepting deposit and advancing loans. When it is all about the accepting deposits, we know that commercial banks have various accounts and the customers can go and deposit their money. And the same money is further used for advancing the loan to the needy people. So these two are very important. Further, I'll explain you how does it advance the loan. Then overdraft facility. This is very frequently asked question, especially in overdraft facility is also one of the primary functions. It is provided to special customers where the customer can withdraw more than the limit he has in the bank. That means if he has certain shortage of cash or the deposits he has in account, he can definitely have an option to get a little more money out of the account over to the deposits because the bank wants to oblige the customers. So this is what is known as overdraft facility. For example, if you have 50 lakhs in your account and you want to make a payment of 55 lakhs, so it is only short of 5 lakh. So if you're a very valuable customer to the bank can give you the overdraft facility of 5 lakh, which has certain term and condition. Here we don't need to talk about. And this is what is known as overdraft facility. Then comes this discounting of bills. See, we have various bills like we have security, bonds, exchanges, and many more things which are there in our hand. And this is generally transacted through commercial banks only. We purchase it from them and we sell it to them only with our profit. But suppose we have certain emergency funds requirement. So we can go to the commercial bank and commercial banks can give the money in exchange to it with some discount or with some penalty charged on us. Transfer of funds, we know that it can transfer the funds to our account, different accounts. We do it. In fact, if many of you have your own account, you must have seen, or if you have operated your parents' account, you must have seen that. Collection of payments of various items, various kinds of examination, competitive exams and all, various kind of charges, various kind of payments are all accepted by the commercial banks, especially SBI in India. Now, purchases and sale of foreign exchange. If you want the foreign exchanges, like you want to convert your currency into USD or you want to convert it into pound or any other currency because you want to go to foreign country or you want to make the payment. So definitely you can take the help of commercial banks. Now, the other functions, that's the secondary functions, they help you for income tax. They work as consultancy. They're also the trustees and executors. There are many trusts, there are many institutions work for the welfare. Sometimes it happens that there's a child where the parent want the child to be secured. So when these kind of funds are deposited, the bank works as a trustee to that particular person who is here entitled, or the or the institution or organization for which the fund is being collected. Letter of recommendations, like you get LORs from your schools for the admission in colleges. In the same way, if you want some LOR for your credit scores or for your credibilities, then the banks can again help you. They give you locker facility, they give you traveler's check, although the traveler's check is nowadays not that popular because of the availability of MasterCard, Visa card and all. But yes, it is also one of the function. Underwriting securities, the various securities are also underwritten by the banks, commercial bank, and the various statistics which are required by the RBI are also collected by the commercial banks. So they help as the helping hand, or they work as helping hand to the RBI. As I just told you, that there is one very important function, which is credit creation or giving loans to the consumer. This is a 3-4 mark question. I have taken it directly from your textbook, and the reason behind, I wanted to show you the way you need to write the answer. So whenever it is asked that money creation or credit creation, what is it and how is it done? So what you should do is, you should first of all write the opening statement, and don't forget to write the assumption. I'm telling you what assumptions are. The first assumption you should write, that how much is the LRR in the economy. Whatever LRR you want, you can take 10%, 20%, okay? And secondly, there is only one bank, and all the customers are depositing their money in that bank only and withdrawing their money from that bank. So these are the two assumptions which you must write before you start this answer. Then you need to make this table with the first column in initial deposits, loans, and the LRR. LRR percentage is very important. Now what you see over here, now start to understand the process. See, assume that in the first round, the initial deposit is 1,000, or the initial deposit is just 1,000. Now, I told you that bank works as a chain or link between the depositor and the person who is borrowing the money. That means a person who has surplus money and the person who doesn't have money or is short of money. So the person who has surplus money will definitely deposit it in the bank. So this is what, suppose a person had surplus money, which is 1,000, he deposited it in the bank. Now, the bank has to pay some interest on the deposits, and bank cannot multiply the money just putting it in all its vault or in its lockers. If the bank is putting all the money in the vault, then the money is going to multiply and the banks can make the payment of the interest. That is not possible. So what bank does is, bank starts earning out of this money. And how do they earn? They have to keep some percentage of LRR as per the advices of RBI. I repeat, RBI. So if 20% is the LRR, as the assumption is saying, so 20% of 1,000 is 200. So 200 is reserved with the bank in the form of LRR, which we studied in ADS chapter also. Now remaining 800 is further advanced or created as loan by the bank. Now, as I told you that there's assumption there is only one bank in the economy. So obviously the person who got 800 rupees will deposit it in the bank. 800 is the round one deposit in the bank. Now out of 800, 160 is the LRR and 640 is further forwarded as loan. And this you see because there's single bank in the account, again deposited in the bank. Out of this 640, 128 is reserved as LRR and 512 rupees is forwarded as loan. So what you learn here, children, that the money here is from 1,000 rupees becoming finally 5,000 rupees. That means the deposit in bank is now CRR or LRR with the RBI is, or the commercial banks is 1,000. How could it be possible? Why could the money be 5,000 from 1,000? And kahan se likha ye? We have not, see what you see, there are dash, dash, dash. We haven't written any rounds here, or we haven't written an amount. See, it is not feasible, practically not feasible. In exam, you cannot write 10 to 12 rounds. So just write 2 to 3 rounds, that's it. And then write the final amount. So how do you calculate the final amount? You calculate the final amount with the help of this formula. This is called as money multiplier. This is very important formula, which is money multiplier is equal to 1 upon LRR. So if 1 upon LRR, that means 1 upon 20. You can see here the LRR is 20%. So 1 upon 20 is equal to, this much maths is very much known to you, that is 0.5 and multiplied by 100 because it is in percentage. So it here becomes, of course, by this LRR is claiming that the money will be multiplied to 5 times because 1 upon 20, that is 0. That is to be 0.5 and further it becomes 5 times, and 5 times of 1,000 is 5,000. So the final amount is 5,000. This is what here been explained. You can explain it in your own words. No need to copy the words written in the textbook. But don't forget to write 5 things in this answer. The first thing is opening statement, that is about the introduction, then the assumptions, then this table, then the explanation, and the fifth very important thing, that is multiplier concept. So this is money creation question, always asked in 4 or 3 or sometimes 6-mark question. Now coming to the functions of central bank. There are certain important functions of central bank. The first is, of course, the central bank is the currency authority. You must be knowing that in India, whatever currency is issued, that is issued under minimum reserve system. It's a one marker, please note it down. So with 200 crores minimum reserve, we actually have the issuance authority, which is given to the RBI only. No other institution is allowed to issue the currency. Now, this can be a point. Suppose sometimes you're only asked that explain the authority of currency issue of the RBI or central bank. So you need to elaborate it. So what all you need to write? First of all, that only RBI is allowed with the system of minimum reserve. Why is only RBI allowed? Just to maintain uniformity. And other than the coins and the smallest denominations notes, like that is 2 rupees, 5 rupees, all the other currencies are issued by the RBI. Then who issues these coins and this very small denominations currency? That is the finance ministry of our country. This is again a one marker. Finance ministry of our country issues the coins, and also the small denomination currencies like 2 rupees, 5 rupees, 1 rupee and all. Then comes banker to the government. See, I told you initially that commercial bank is the banker to the common public, but government also needs a bank to it. So who is the banker? That is the RBI. Why is it called the banker? Because first of all, it accepts all the deposits of the government and it also keeps the account for the government. Second, it also makes all the transactions against or on behalf of the government. For example, making the payments for foreign exchanges, making the payments for the export and import, and accepting the payments. All these are done by the RBI. Then it also advances the loans to the government. In the need, like we go to our banks, our commercial banks for the loan, in the same way, the government goes to RBI for the need of the loan. Then bankers bank. See, like we need the banks, banks also need the bank to itself. For example, SBI, Bank of Baroda, they are the banks. They sometimes also need somebody to guide them, to advise them, and also to lend some money to them when required. So that is why it is said that the RBI is the bankers' bank also. So first of all, this is custodian of cash reserve. Whatever cash reserve, that is LRR, in the form of CRR and SLR, are maintained with the RBI from the side of the commercial bank. Lender of the last resort, you see, who is our last resort? That is the bank. And who is giving the money in crisis to this last resort? That is the RBI. So RBI is also acting as the lender of the last resort. Clearinghouse function. It's something very different and very important also. See, when there are multiple banks working in the country and there are multiple consumers giving checks against the different banks, so it is RBI which works as the clearinghouse function. Like suppose there is bank A and B and C. So if somebody is giving check of bank A to B and of bank B to C and of C to A. So all, see, this is so complicated. It's not easy for the banks to go directly to the banks and ask for the money that aapke naam ka ye check hai, please give me the money. No, that is not feasible. So what they do here is they take the help of the RBI, because RBI is a common link between all these banks. So RBI actually coordinate with all these banks and makes it easy and withdraws those amounts which are going to be credited into the other bank account. So it is debiting from one bank and crediting into the other bank, which is what is known as clearinghouse function. Now, this controller of money supply of credit. I have already explained this when I was teaching you aggregate demand and supply. where inflationary and deflationary gap was being covered. Even then, once I would like to remind this to you that whenever there is excess money supply, it means inflation, or there is deficient money supply, that means deflation, the RBI has two measures. That is quantitative measure, under which it has repo rate, bank rate, open market operations, and legal reserve requirements. That is LRR. Repo rate is the rate at which the commercial banks are going to take loan from the RBI at a short period of time. Bank rate is for long period of time. So when these crises there, like inflation is there, the bank rate, repo rate, reverse repo rate, open market operation are all increased. When they are increased, the commercial banks are left with least fund, or their fund availability is reduced. And when their fund availability is reduced, they further are not able to forward the money to the market or the consumers. So this is how the liquidity in the market is absorbed. I repeat, the liquidity in the market is absorbed. Then comes this qualitative measure. The qualitative measure comprises of margin requirements, which is all about the collateral. Like there's some limitation which is fixed by the RBI, that this is the margin and you cannot give more than this much of loan on the collateral. Suppose there's a property of 1 crore, that is 1 CR, and somebody needs 80 lakh rupees, but the RBI has fixed the margin requirement of 40%. So that person can only avail the loan of 60 lakhs. But if the RBI has reduced it to only 10%, so that person can happily avail the loan of 90 lakhs. So this is what is known as margin requirement. So by shrinking it or expanding it, the RBI is going to help in controlling the inflation and deflation. Moral suasion, this is all about moral persuasion to the banks from the side of government and the RBI. There are certain written notices, sub guidelines which are given to the commercial banks by the RBI just to stop or control the unproductive loans from the market. Now, selective credit control, it really functions because this time the RBI does not allow the commercial banks to give the unproductive loans or the loans which are responsible for excess consumption. For example, the personal loans or excess limit on credit card, or the loans like car loan or vehicle loans. These are all restricted for some time period, because when there is availability of such loans like personal loan, credit cards, vehicle loans, then the purchasing capacity of the person is increased and he is going to increase the inflation in the economy. So these are the functions of the RBI. Actually, this is a unit comprising of two things, that is money and banking. It's all theory chapter, complete theory chapter, and very scoring because it has a weightage of 6 marks. So such a short topic, if you prepare it wholeheartedly with 100% of effort, then you're going to score 6 out of 6 in this chapter. So just to secure your 6 mark weightage, I would advise you to prepare these two small topics wholeheartedly, especially the 1 markers, because these two topics comprise a lot of 1 markers as said by me in the session. That's it. I here stop the session. Thank you so much. Hopeful the sessions were helpful to you.